Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
All right, Janine. Today we're diving into some significant news from the Bank of Canada. It looks like a rate cut to 2.75% next week is almost certain. This comes after some interesting employment data was released, right?
Absolutely, Steve. The Canadian economy only added 1,100 jobs in February, which was way below the expected 20,000. It's a clear sign of a slowdown, even though the unemployment rate stayed at 6.6%. It's got a lot of people talking about what this means for the Bank of Canada's next move.
Exactly. And it seems like the odds of a rate cut at next week's meeting have jumped significantly. David Rosenberg from Rosenberg Research and Associates mentioned that the odds went from 50% to 85% after the jobs report. That's a pretty big shift.
And it's not just about the numbers. There are real implications for people across different industries. Retail and wholesale trade saw some gains, but other sectors like professional services and transportation took a hit. It's a mixed bag, and it really shows how the uncertainty, especially with trade relations with the U.S., is affecting us here in Canada.
Right. And Nathan Jansen from the Royal Bank of Canada pointed out that the uncertainty from U.S. tariffs is impacting hiring decisions, particularly in goods-producing industries. This isn't just about numbers. It's about how these policies are affecting businesses and their confidence moving forward.
And with the Bank of Canada set to announce its decision on March 12th, all eyes are on them to see how they'll respond to these challenges. The swaps market is already pricing in a high chance of further cuts this year, which could see rates drop below 2.5% by the end of 2025 if the economic conditions don't improve.
It'll be crucial to watch how this plays out, especially since the Federal Reserve in the U.S. is also taking a cautious approach due to similar uncertainties. It's a challenging time for policymakers, and their decisions will have significant impacts on the economy.
Yes, Steve, and for our listeners, it's important to stay informed about these developments. The decisions made by the Bank of Canada will influence everything from mortgage rates to broader economic trends, so understanding the context and potential implications is key.
Now let's talk about the big news in the mortgage world this week. 3 of Canada's major banks have made significant cuts to their fixed mortgage rates. This is a big deal, especially with CIBC lowering its high-ratio 5-year fixed rate to 3.99%, which is now the lowest publicly advertised rate among the big 6 banks.
That's right, Steve. Such a move is quite unusual and reflects the broader economic uncertainty. A lot of this is tied to the dramatic swings in the bond market and the ongoing trade tensions with the United States. It's been a challenging time for everyone involved, from banks to borrowers.
Absolutely, Janine. And it's interesting to see how the banks are responding. While CIBC took a more aggressive approach, TD and BMO also made some rate reductions, albeit more measured ones. This is likely a reaction to the drop in the 5-year Canada bond market, which saw a significant decline from its peak in January.
And what's important to note here is that these cuts are happening amidst a steady stream of reductions from other mortgage lenders across the country. It's a domino effect, really, and it's largely influenced by the potential for more Bank of Canada rate cuts if economic conditions don't improve.
David Larocque from Integrated Mortgage Planners pointed out that the Bank of Canada might be cutting rates more aggressively as a precaution against the economic headwinds caused by these tariffs. It's an interesting perspective, and it highlights how these decisions are not just about immediate numbers, but also about long-term economic strategies.
Yes, and Larocque also mentioned that while bond yields are falling, risk premiums are rising. It's a complex situation, and fixed mortgage rates are not reacting to bond yields in the usual way due to the volatility. It's similar to what happened during the oil price crash in 2014 and 15.
There's definitely a lot to consider, especially since banks are not just reacting to every minor change in the bond market. Instead, they're looking at sustained trends. CIBC's aggressive pricing might also be a response to its recent quarterly earnings, where its mortgage origination performance was relatively weak.
And as Tracy Valco from Valco Financial noted, this might be a strategic move by the banks to entice buyers now before the potential economic storm hits. It's a way to gain market share in a downtrending environment, but it also puts pressure on brokers who have to compete with these big banks.
Indeed, Janine. For brokers, this means adjusting strategies and perhaps accepting lower income to stay competitive. It's a tough market, and everyone is trying to navigate these challenging times.
Absolutely, Steve. It's a reminder of how interconnected these economic factors are and how they affect everyone from banks to individual borrowers. It's crucial for our listeners to stay informed and consider how these changes might impact their financial decisions.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.